What's up, YouTube? It's Joe Catchpollia sitting on the couch, making some money, investing in fractional real estate online as usual. Today, I'm back on Collab, which is collabhome.io. As I mentioned, I did my first impressions of their website yesterday. I'm going to dig into this property 33 Mine. This is in New Brunswick, New Jersey. It's a student housing property. It's actually, I'm not exactly sure if it's 9 or 10 bedrooms, or maybe even more because some of them have an A and B, but I think maybe that's two beds in the same bedroom. I'm not sure. I couldn't figure that out just from digging around. But I could, certainly could have missed it. I want to correct something. I think yesterday, when I was talking about their process, I think I said that they were what they were making as registered securities, and I don't think that that's accurate. And so I'm not a securities attorney or anything. I don't. It's not even something I was super interested when I was in law school. And again, not a lawyer anymore. Nothing. None of this is legal advice. But this is a section out of when I go through to buy something. This pops up, and they say, it's not offered. It's not registered. It's not a registered security under these rules, and they're operating under an exception, which is what I think that Reg A plus that they talk about. I think they're upfront about it. I think I just might have misspoke about what it actually is. Um, so I wanted to correct that. Also, got a little feedback from the same person who had mentioned this site to me initially. About my comment about them not having what I would call institutional quality properties. He had mentioned that they're just not really representing it well on some of the sites or some of the property listings. This is one that's under construction. He gave me a couple pictures, and then this is one where the listing on this 2425 Durant, uh, at the moment it just shows two older homes, and he mentioned that those are actually going to be torn down, and this is going to be a 26 floor property. I have no idea who the guy is. I met him through the internet. He reached out, so take that for what it is. But it's interesting, and if that's accurate, hopefully they'll update that and do a better job of actually showing what it is that they're offering. The one I'm looking at today isn't again, it doesn't really fit into that box that I'd call institutional quality. I actually just wanted to look at it because I like the New Brunswick, New Jersey market. It's I think I mentioned, I used to live in work in New Jersey. I've owned rental properties there. It's super tough to deal with. It's a very landlord or not. It's not a very landlord friendly state. But as I mentioned yesterday, it's sort of their strategy to work in areas. It seems that it's a little bit more difficult because it's a little bit higher barrier to entry, right, and less competition. Which makes sense why they'd have a property in New Jersey and why they'd have properties in California. Um, and somewhere where I was looking at this, I actually think it might have been the LoopNet listing, and I'll show you that in a little while. It mentioned that it is a boarding house or a rooming house with a permit, and I'd forgotten about that, but that's something that you can get a permit for in New Jersey, and so there's specific rules about it that I'm not really up on. I feel like I did one deal, but I've never owned one there, and so I looked into it a little bit, but I really don't know how it works. But I thought that if you had students, that was an exception to needing one anyway. But I'm obviously not sure at all. Um, so first of all, just like always, well, I want to talk about a couple of things that I figured out before I jump into the market, because remember, we always like to do two things, right? We do the on-platform due diligence and the off-platform due diligence. I usually jump back and forth between the two. I'm not extremely familiar with their platform yet, so you're gonna have to bear with me a little bit, and there's probably stuff that I'm not gonna find right away. But one of the things that I didn't love at right off the bat was, they're giving you, this is the total property price, and this is the total offering, and both of those are accurate, right? This is the total property price, but this isn't the total of. So in my mind, if I saw this, okay, this is the offering, so this is our equity, and this is how much money they're raising, and this would be the total, right? This should be the debt plus the amount that they raised, but it's not actually accurate in that way. They're not wrong. So, and I'll just show you what I'm talking about. So when they give you this price is the existing debt, and they tell you this. I mean, if you dig into this, you can figure this out all on your own. But it just whenever something jumps out, it's not exactly how I would expect it when I first read it. I like to point that out, right? So this is the net purchase price of the property. So they're saying this price plus the outstanding debt is how you get to this figure here. And so that is, $148,000, give or take, less than the total proceeds that they're raising, right? Because this is the total raise. So basically, this number here, you'd have to add, doesn't include all of this, right? And it makes sense because a lot of those are expenses. But, when I'm looking at my basis, I just want to know what the whole thing costs, right? Like if I'm trying to look at this property and decide if I want to buy a piece of it, well, I want to know what the whole, I want to look at, what is my share? If I bought all of them, what does that cost? So, I see what they're doing, but I didn't like that right away. And so what are some of these costs? Well, it's, we talked about it yesterday. Some of it's the sourcing fee. There's brokerage commissions. I mean, that makes perfect sense. Um, and it's just 1% here. I think that's because, and this is one other thing I'm going to show you, is that they're selling it to them, to this series from a related entity. And this is just me reading these documents and trying to figure out what's going on. So as usual, you want to read them yourselves. Make sure that what I'm saying is accurate before making an investment in this. But so somewhere else in this same document, this is in that I don't know if it's the offering circular or not, but it's linked. It's linked from their site. I just don't know if that's actually what it's called, but it's on the SEC website. And you can see, so the offering is to buy, this is the series that you're buying the shares in, I believe, and it'll enter in an agreement to purchase with these other things, the affiliated entities of the managing member and the owners. Okay, wait a minute. Entered into a purchase agreement with these entities, right? And so these entities are um, affiliated entities of the managing member, meaning I believe they already own it. So this is the affiliated member owns it, and they're selling it to this series that we're buying shares in. And so I think that's why those commissions are so low, right? Brokerage commissions 1%. I think it's just they're just helping with that internal paperwork. It's they didn't list it for sale. I'll show you a couple of spots why I think that's going on. Well, one, because they're telling you this, right? Like they're entered into that purchase and sale agreement. But when we look at the deed, right, this property was actually bought. Let's see, it's easiest to see when you go up to here. You can see the not the submission date, but they have the document date in here. And I tell you, it's easiest to see. Maybe it's down here. Yeah, so document date of the deed is actually 2021. And when we look in here, you can the details of this deal. They're showing you, well, it was 100% occupied from in 21, 22, and 23. And so I think what's going on, the the managing member of the entity, so it's somehow related to the company that does the Collab website. They bought the property in 2021. They've been running it. Now they're selling it to this related entity that we are buying shares of. I think this is what's going on. You know, uh, we're assuming some of the debt, and actually, this is one of the things that's kind of interesting. One of the things that's good about this is that okay, they have fixed rate debt. Well, it was fixed for the first 5 years at 3.875. So we're getting the benefit of this low debt at least until June 22nd of 2023. So, we're after that, it's going to, adjust to this rate plus 2.5%, which I'm sure means it's going to adjust up significantly. But so a couple of things. Let's see. So one, I think it's good we're getting the benefit of that older debt, right? But you can see when we look at this deed and the price that was paid back then, uh, it was like 1.2 million roughly. And so, since that time, now the total that we're paying is almost 1.6. So, we're buying into this at about $400,000 more. Um, Honestly, during that time period, there's been a ton of, uh, in most markets, real estate prices have gone up significantly. So it's not that I necessarily think we're overpaying it at this price, but we are essentially cashing out a related entity at a significantly higher price than what they bought in for, or that. So, you know, I just like that to be as clear as possible whenever I'm looking at a deal, right? Where there's I don't know if I call it self dealing, but where they're it's not as if like Collab is going out buying this home and or buying this property and at that moment raising the money, right? Like I mean this is one that's been running for a while. This price the total price that we're paying has nothing to do with the price that they bought this for in 2021. Honestly, it doesn't change whether or not it's a good deal. But I just like to know what it is, and it explains why this is such a low loan to value ratio, right? Because they're taking it over with the existing debt, and so when they bought it, one, the debt's been paid down a little bit, I believe, because I saw two different numbers, 900,000 and 875,000. So it looks like maybe the debt's been paid down about 25,000. Um, but in addition to that, that debt was 75% of the 1.2 million price, but it's significantly less of this higher price, right? So, we are it's easy to get hung up on, stuff like this, like, oh, well, you only paid X and now I have to pay X plus something. It really doesn't change whether, like I said, it doesn't change whether or not this is a good deal. But I'm always for more transparency than less. And, it didn't take a ton to figure this out, right? I mean, it's all in a document that they're sharing. Um, Everything that I'm saying here is in a document that is linked from their site. But sometimes it bugs me a little bit when, and I think they're doing it mostly for ease of understanding. But, this one, I think I would just like to see, if they're gonna break out total property price and the offering value, I just like them to do one third, one additional one and say, and this is the, additional associated costs that are included in this number, but are not included in this number, right? I mean, I think that's, um, because, one of my concerns with all of these platforms that are, um, depending on how they're operated, is it's hard to overcome the fees, right? And so I just want, like, I like that to just be just as in your face as possible. But I mean, we do see them right here, right here in the link document, right? And so it's not as if they're trying to hide them. And I get it, right? They're trying to sell these, and so they're disclosing what they have to where they feel they should. But it's I just for me, I always like when things are a little bit more in my face when I look at this, if I'm going to make certain assumptions, if those assumptions are wrong. And I think that are pretty reasonable things to think. So I want to mention that. Let's see. And then, oh, a little bit more about their site, though. I really like, you can dig into, this is linked from, let me show you where that link pops up. When you look at this live property info, lease performance by unit, you can actually go and see, is there an outstanding balance? Is every unit rented? And I think that right now they have one unit that's rented. This immediately leads me to believe that the let's close this deed. We're not going to look at that again. These numbers maybe not weren't 100% accurate, saying that there was 100% rented. I believe at certain points in time they were 100% rented, but my guess is there were different, short periods of time of turnover. And occupancy should always include any turnover as vacancy, right? If you're looking at your occupancy rate. So even if it's frictional occupancy, right? Even if somebody moves out, it takes you a week to clean that unit up and get the next person in there. That's almost, that's a week is, what is that? 2% occupancy, right? Or 2% vacancy. So 98%. So whenever I see 100%, I think it's possible that they're moving students out, cleaning it up and moving someone in the next day. But my guess is that's not really what's happening. Um, Especially when, right away we can see, okay, they have a unrented unit here, but that's B, right? And this is what I was saying. This is Unit 6B. Unit 6A is rented, right? And so maybe they're saying, well, it's still occupied. It's just not both beds. I mean, I don't know. Um, I'm really curious, what the actual, if this really was 100% economic occupancy, or if there were turnover times, where there were days of not getting paid rent. But I really like that you can do this, right? Like, this is awesome that just from their site, when looking at the property, I can click into this and this is giving you what they say is real-time information from building, right? Like, this is way more transparent than a lot of the sites that we talk about. And so this I think to me is a huge plus. They do the same thing with, what their daily operating tasks, and you can kind of see, you can go through and see, like, they did, they $300 for the shower work. I don't know. I think some of these you can click and find out a little bit more about what's going on. Some of them you can't. But you can actually just see, like, go through and actually see all these different transactions and what they're doing. Um, Maybe if I were going to make a big investment in this, I'd want to spend a lot of time digging into these. For me, I don't know that this is something that I'm going to do a lot of due diligence on or not, but I think that the fact that this is, completely transparent, I can go and look at this, might be able to see, like, if there was certain things, like, you could see plumber fix, like, if we saw this every 5 days or something, right? Like, if you could see, like, if there's ongoing issues. Yeah, okay, somebody got a discount for lawn maintenance. That's kind of interesting. But you can, I don't know. I think I'm always for more transparency than less. And so even though, that other thing I mentioned, I don't love that. This, I think, is just fantastic. And, again, like, they're a new platform, relatively new. And I think that there's a lot that I like about what they're doing right now. And, some little things that I just want to point out, that because I want to make sure it's not, uh, because it's not how I was thinking about it, and so I want to make sure about that. But so there was just a couple little things that you can get on their platform. The other thing too, I wanted to mention, I talked about the how this annual appreciation rate, how they're just using the CoStar number. One other thing that the person who had mentioned this site to me had said is that, they've already had a discussion about somebody buying all the units, or, all the student housing, and that, led them to believe that they'd have even more appreciation than, and again, stranger on the internet, who knows if whether or not that's true. But what I do want to say is, just because I don't necessarily think that having a national CoStar number means anything, I don't want you to think that I'm saying this won't appreciate this much, right? Like, all my real criticism is, if we're going to project appreciation, I'd like, some real data to back up the story on a granular level, right? Why is this market, why are I projecting a certain amount of appreciation in this particular market, not using one that's a blanket one, across the platform. I think it's possible that they're doing this because, because it is a number that they can point to, and so it sort of backs them up when they're having to file information. But where it does make up a big part of my return on this one, right? Like, I mean, your annualized return, it's almost half of it, or actually a little more than half, is because of the appreciation, right, in that sale value. So I'd like to know, I'd like to just hear the story, right? Have it somewhere on here why that number, why, and if you're going to use the CoStar number and say, well, this is the national CoStar number, and this is why we believe we'll hit at least that, right? If you think it's going to be higher, because this market tracks, that, the nation, or for whatever the reason is, right? Because there's been more demand, or, we're looking at this submarket and what the numbers are doing. Um, that's sort of what I meant when I'm looking at that CoStar number and thinking that it doesn't really mean much at all to me. Just wanted to clarify that. But now let's dig into this a little bit more. Um, that's a lot of what's on the property. Oh, one other thing that I saw, which is a little bit weird, is they have some problem calculating their net operating income. So NOI is before debt service, and from somewhere, I don't remember where I found it, but I have, their debt service is actually, I think this is the quarter, for the quarter, it's $8,000 because this is quarterly numbers. I'm pretty sure this is for the whole quarter. Um, but they're saying, okay, their net operating income is 5,000, and it's less than their, so they're showing a loss basically, right? Like, I mean, that would be a loss for the property after debt. But when you look at their operating expenses, this is why I had the Excel open. If I add up all these numbers, they equal 15,535, not 22,953. So they're $7,000 off just from simple math, right? Like, I just added up these columns, like, or each one of these, this column here, and it gave me this number, not 22,000. And I did that because just looking at this, I could tell, like, that doesn't make any sense, right? Like, if you do 3 and 7, just adding them up this way, you're not getting to 22. Um, so I don't know. I don't know what's going on there. I actually clicked into here and asked them about it. I did that at like 1 in the morning, so I didn't get a response yet because it's 1:50 in the morning. That doesn't surprise me at all. I would have actually been shocked if I got a response this late at night. But so understanding what's going on there, um, if they just didn't actually put the expenses on there, but this is the real expense number, well, that'd be a little concerning for me because then it looks like they lost money after debt service because, again, NOI is always before your debt service. Um, I don't know. That's something I really want to figure out because looking at previous quarters, this operating expense was significantly lower. Uh, And so it leads me to believe there's an error here, or there's like a one-time expense that should have been included. It was included in the total, but not in the line items. I'm really not sure. Let's see. Use of proceeds, risk factors. All of these, yeah, all these, they do call it the offering circular. But I'd encourage you for every one of these properties, because that is sort of the controlling document, to look at that, right? I mean, that's where all the info that I talked about so far came from. So I'm going to close these. Um, and that's one of the things, like, I do like that they have this, basically public information. I mean, it's on the SEC website that you can look at. It makes it a little bit more clear what you're getting into than some of the ones that are just like sort of, um, not doing anything like that at all. Let's see. And so, yeah, I want to jump into, the regular due diligence that we do. I do want to mention, looks like the FEMA server is down. I couldn't get anything on the National Risk Index or on the flood map. I'm a little concerned about the flood map, but not terribly. But I'll go back and look at that later. I don't really expect it to be an issue here, but I like to check every time. As I mentioned, I think I mentioned this yesterday, I did go to Rutgers in Camden. I have been to this campus in New Brunswick. But I didn't spend a ton of time here. I don't even remember why I visited this campus, but it is, so I know it a little bit. Know New Jersey quite a bit because I've worked both in in the suburbs of New York City and also in the suburbs of Philly at different points in time. And so most of the populated parts of New Jersey I've been in. Um, I wanted to show you just the map. You're really very close to the Rutgers campus. Um, let's see, and close to a Jersey Mike's, which is always nice. But there's better local places, I'm sure. Let's see. Just like always, like to look at this. Um, it is. I believe it's this one. Maybe not. No, it's this one. Sorry. There we go. Right, that's the one. Let's look at the picture again. Yeah, that's it exactly. Doesn't have that on that door, but it's the same one. It is 33. They just have made it. But anyway, going up and down this street, I spent some time doing this, but because I have been in the area too, I didn't spend too much time. I think it's a good location, and I can understand why this would be in high demand for student housing. Let's see, close that. I did look on Zillow. I was just curious what it would say, but it doesn't have the right description of the property. It's got a crazy low price relative to the rent that you're getting for the number of units. So I thought that one didn't really apply. Redfin seemed to do, or no, Realtor seemed to have a better idea, because they had the last sold at 1.2 million. They're saying 1.482, and you remember we're talking about buying in at 1.6. And again, this doesn't even include the extra 140 plus $1,000 in fees. Now, when you purchase a property in real life, it doesn't include all the closing costs and everything. But we're talking about, they think it's worth $200,000 less than what we've got here. Now, this is not the type of property that I'm really going to take realtors um, estimate for, because it's not a single family home. So I'm not, I'm actually going to struggle to figure out how to value these ones, right? Because um, I don't have a nationwide CoStar subscription, and actually I let my subscription just here in San Antonio lapse because I just didn't use it enough. And so, coming up with what the cap rate should be in this submarket, because that's how it's a commercial property. That's how we should look at it, right? We should apply a cap rate to the net operating income. Um, but without having, access to that data in this market, what cap rate I should use, I'm not sure. So it's good. This is going to be a challenge for these properties for me, to really dig into the value. Uh, they don't provide an appraisal as far as I could tell. I couldn't find one anywhere. Um, I could certainly be wrong about that. Oh, one other thing I want to mention, they do these like Matterport style. I don't know if that's the company they use. I actually think maybe it's not. Um, Property walkthroughs where I actually love these, right? You can actually zoom in, you can walk around, you get a really good sense for the property. Now, again, this is, you know, uh, this was one that I used as my example when I was like, oh, this is not an institutional quality property, right? I mean, it's just not. This is an old property. This is something a lot of mom and pop investors would own. Um, I just picked this one because I like this market. Oh, I'm having a little hard time with this. Let me just close it. But I like that they provide these for the properties. Um, I think that they are trying very hard to give you, some. We don't just have a couple old pictures, right? Like we've got. I think that's good. I think like I said, the real time leasing data and the real time tasks info. They're trying to give you a pretty real, idea of what this property is doing. Let's see. But so, okay, back to, I don't know what made me go back to that. But so, okay, again, I don't really, I don't know I don't trust Realtor, but it's just interesting to see what they would have to say, right? And then this is not so far off, but I mean, $200,000 difference is a pretty big number. Get rid of that. This was, when I pulled it up on Redfin, all the ones I found were just for the rental listings for the units. And I actually think this was kind of an old one. So yeah, they're not super useful. This is the LoopNet listing I mentioned. This is a really old listing. Let's see. I want to say this is, yeah, I think this is maybe from when it was listed. I think they showed that they bought it in December of 2021. So I don't know, maybe this sat on the market all that time, but somebody did try to list it that far back. Um, and so, whenever I'm looking at commercial property, sometimes I'll come across these old LoopNet listings. I always think of Loop, from my commercial real estate days, LoopNet is really where like okay, the broker couldn't sell the deal on their own site. They couldn't sell it to anybody that they knew. Uh, so then they go throw it up on LoopNet. So a lot of times the deals on there are pretty bad. I have done a deal on LoopNet. I spent a decade looking at deals on LoopNet and not doing, not buying anything from there. But I have had one transaction that I can think of, that came on there that was a good deal. So a lot of times, if a property was listed on there, to me, it's like a negative. Now, it doesn't mean, I don't know what they had it listed on here for. It could have been at a much higher price, and that's, I don't know. But this is one place where it says 10 units, and so is why I was a little bit confused when looking at the rent roll. Um, where it was, or when they're describing it as, I think they describe it as a 9-unit property. But then you have some A's and B's. So it's very unclear. Let's see, property description. Um, yeah, features 9 units. So I don't know. I don't know why they were trying to sell it as 10 before. But if you hear it says 9 total bedrooms, 2 kitchens, and 3 bathrooms, but typically occupied by 14. And so this is what I think is happening. Although there were only 13 entries when we looked at the lease performance, and they showed one vacant. So that makes sense, right? Like, okay, the A's and B's they're saying, so yeah, we have 13 here. So let's see. 1B. So we've got 4B's, we've got 4A's, and we have 1, 5, 6, 9, 2, 3, 4, 7, 8. So yeah. Um, hmm. Yeah, that is only 13. I wonder if maybe one they were doing as 2 units that they're not now. Maybe this unit 4, right? That's a lot of money compared to some of the other ones. I don't know. Um, but so I think that makes sense to me what's happening there. But 9 bedrooms, 2 kitchens, 3 bathrooms. I would like it if that type. Oh, what happened to my property description? I'd like it if that it said it. It says 9 units, accommodating up to 9 students. Well, that doesn't look right compared to what we're looking at, right? It looked like that with the A's and B's, it looked like that it's actually more. So I don't know. I'd like this to be a little bit more clear and help me understand what I'm really getting, have it match up with that leasing data that we're looking at. Obviously, it doesn't have to match up with this data because this is old, but I think this is probably accurate, right? It would be nice looking at this to know how many bathrooms there are, right? Because if there are 13 students sharing 3 bathrooms, that gives you a good idea, a little bit more understanding of the desirability. But then again, yeah, and the bathrooms themselves didn't look, they weren't like multi-use at a time. Let's go back to this walkthrough and see if I can get this to work a little bit better. Bedroom. Downstairs bathroom. Oh, I just clicked on the wrong thing. Yeah, I mean, so it's not as if these are bathrooms that are being used by more than one person at a time. So it is, um, if we just have three, uh, I mean, it just gives you kind of an idea of like, whenever I'm doing, I look at it with the rent by the room housing, which I don't do a ton of either, but like understanding how many people are willing, I look at it a lot on short-term rentals and understanding how many people are willing to share, like I don't usually want to have more than 4 to 1, right? So like, and this is a short-term rental standard. Maybe for student housing, they're a little bit more willing to, especially if this is a reasonable price point for them. Well, it doesn't seem super cheap, but I guess it's been a long time since I've been up there. So it probably is. But like, so if we have 13, that's more than 4 to 1, but it's not, you're not getting 5 to 1 yet until you get to 15. I don't know. Just one of the things to think about. I'm going to close that again. Uh, I want to, oh yeah, I mentioned a couple of times, I'm interested in it because I like the market. I want to show you a little bit about the market. So this is New Brunswick, um, city in North Jersey. They had really strong growth in the 2000s and 2010s, and then, or, in the leading up to the 2000 census and the 2010 census, and then not very strong growth at all. And then just a little bit in those 3 years, although 1% for those 3 years gives you a little bit of a stronger run rate. Um, I'm not actually sure what happened here because it is, um, it's in my mind, it strikes me as a market that's continued to grow. But I don't want to argue with the census data, but it is, maybe in the city something slowed it because when you look at the county that it's in, again, I mean, it's slowing growth, but it had much stronger growth over that same period of time, right, than the city itself. So maybe, maybe my impression of it continuing to grow is really more that the county is growing. But again, I mean, the overall market is continuing to grow, albeit super slow right here. Um, and I'm very curious why, what happened here. But it's something that, I'd want to dig into more if I'm going to put a lot of money in this one. Something that I didn't look at yet, though. But especially because this is student housing, and I think especially with the location, I think this is always going to be student housing, right? So this isn't like when we're looking at single family homes and we're like, okay, well, um, where I think so when we're looking at single family homes that are used as rent by the room or short term rental, but that aren't like in a location that they're always going to be that, right? Then I want to think about, then I'm a lot more concerned about the population growth rate of an area, because at some point in time, the highest and best use might be for it to be a single family home again, for someone to buy it for that. I don't think that's the case here. I mean, maybe very far in the future. I don't know, but I'm much more concerned about what's going on with the school itself, right? With how many people are going to the school. And so I looked up Rutgers University, um, and then I don't know why I just scrolled up to there. That was stupid. Let me just get back down to here, and looking at number of applicants and how many they admitted. And I think the admitted is a little bit more important. I mean, it's good to see the applicants are growing too, right? Like it'd be scary, excuse me, if they were admitting a higher and higher percentage, but and it is getting higher, but there's still plenty of people that want to go that aren't allowed there, right? But so you can see since 2016, I mean, you've had really large growth. Um, One of the things I hesitate because I remember that our law schools merged. The Camden one was actually thought of as separate when I was there, but I was there before this time period. Um, And so I was trying to think like, oh, is the merger, did that move student from one to the other? But it didn't, because again, this is just first time fall freshman too, right? But this gives you like what your new demand is going to be. This is growing pretty strong, and I think that is a good sign for student housing in the area. So this is why I was pretty excited about, I like that market. I don't want to own properties that I'm managing in that market because, like I said, I mean, um, I got out of New Jersey and moved to Texas because, Texas is just so much more landlord friendly. It's, for my own properties, even though I use a property manager, I still don't want to have a situation where, I can't evict someone for a long period of time and which did happen to me up there where, I was involved in, some evictions that just took forever, where it's not like that here. Now, if I'm buying a piece of a property and it's a property that's professionally managed, I'm going to look at that a lot differently. And especially student housing, I don't expect this to have those same sorts of issues. Um, actually, I don't know. I don't know if they have, um, what their eviction process is for student housing there, if they're treated differently or not, or if like the fact that it's a by the room home. Again, if I was going to put a bunch of money into this, I'd probably look at that. But so yeah, I mean, there are a lot of outstanding questions, right? There's the the expenses don't seem to add up right. That was one that bugged me a little bit. Um, I don't have the best picture of what the occupancy looks like, right? Because in the one place it was showing 100% for the last 3 years. In another place we were looking at, um, it's gonna take me a little while to get used to this. When I'm looking at the lease performance tab, um, it shows one vacant, but the number of units, it looks like, they have 13 because they have 13 listed with one vacant. Now, it does say NA, like maybe it's unrented because now this is not supposed to be an A and B anymore. I don't know. I'd like just a little bit more color on that. But I don't know. Overall, I am impressed with the site. I think that the properties that I think that there's stuff that gives me some hesitation. But I like enough about it that I decided I bought the minimum shares for this one. Um, just because I buy it doesn't mean that you should, right? I think one of the things, some of the sites that I've reviewed, I've clearly just decided, like when I went to Arrived and I did put money on Landed, but I took it right off. But there's some other ones that I have looked at and said, you know what, I don't think their annual return is enough. I don't think the total return is enough. For this one, for a current distribution of 0.75%, um, and if I believe it's going to appreciate, and I think that there's a decent chance we will get some appreciation. Um, I'm not going to put a ton of money into this one, but I bought the minimum shares, which for this is okay. It's $5 per share, but you have to buy at least 60 shares, so it's $300. This is a site I've decided I'm going to try experimenting on. I'm going to do the same thing though. I'm going to really dig into every single property, and make a decision whether or not I'm going to. Oh, okay. Actually, right here, number of beds and baths, 9 and 3. So I just missed this. Oh, and this was the other thing that I want to mention. Year built or renovated. They've got 2019 in here. This is just ridiculous. I mean, they're saying, okay, it was renovated in 2019. It wasn't built then. I mean, you can just look at it and know it's extremely old property. And on the LoopNet listing, it says 1927. Um, and I believe they renovated it in 2019, but it's not even that is, when you look at the pictures, it's not like they did a full gut rehab, and like have all new finishings. It is very much an old property, right? It's an old property that, let's go back to this, right? I believe they did some renovation to it, but it doesn't, I mean, this is not, I don't know. I just think that's one more thing that I would have liked them to say, 1927. I shouldn't have to go off of this site to know the year it was built, right? And especially if you're someone who, for example, is concerned with lead-based paint issues or asbestos, knowing that this home wasn't built in 2019, it was built, 80 years earlier than that, or 90. I think would be important, right? Because I know a lot of investors that say, I don't buy anything that was built before 1978 because of those two issues. Um, you know, it, I don't think that anybody's looking at this property and would think that, but again, I mean, I just don't love that it says that. And then this square footage doesn't match up with, um, it does match up with here. What was this one? Oh, that was just the lot. Okay, good. So that did match. And I think it matched over here too. I just said, yeah, and it matches there too. Okay, so forget I said it doesn't match. It just in my head for a second I was like, oh, I remember a 5,000. Um, So I don't know. Yeah, I think that it's going to be worth it for me to want to experiment with it. Honestly, it is more a bet on the team and the platform because I like a lot of what they're doing. More than it is necessarily about this individual property, although, especially because um it does look like that they lost money in the last quarter. I'm guessing that that's wrong because the numbers don't add up. But maybe they did because there's some expense that they pay in Q4. Like maybe they paid the taxes then. I don't know. Um, so I have to figure that out. But for a small amount, like one of the things is just like on some other sites, like once you actually make a small investment in something, sometimes you get a little bit more info about the properties or what's going on. And so I just wanted to go through and actually do that and see, because on the surface it looks like I want to do it. Um, so yeah, now I've talked for way too long. Uh, bottom line is, it's a mixed bag, right? There's some stuff I don't really like about it, but there was I felt good enough that I bought a little tiny piece, right? And I don't necessarily, like as always, I'm not recommending that you do it, but I am going to dig into some of the other properties. As usual, if anybody has any insight on this one in particular, if they've been investing in the site, if there's a specific property I should look at next, any of that stuff, I'd love to hear about it. I've just realized that I've been talking for a very long time tonight, and I'm sorry about that. So until next time, I'm going to just keep making mistakes so that you don't have to.